The power of compounding. Compounding is the process whereby interest is credited to an existing principal amount, as well as to interest already paid. Put plainly, compounding is described as earning interest upon interest. The so-called miracle of compounding magnifies returns on interest over time. Once you've generated extra income, and have taken the time to research a suitable range of investment vehicles, it's time to sit back and let compounding come into its own. Albert Einstein is reported to have said that, compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't, pays it. And also that, compound interest is the most powerful force in the universe. If you reinvest stock dividends, or rental profits, this year, then your dividends or rental profits will compound month on month, and year on year. Compounding is essentially just interest being earned on interest, and the longer your funds are invested in a property, or stock portfolio, then the greater return you are likely to receive. Therefore, it's important to start investing, as early on in life as you can. If you're privileged enough to come from a wealthy background, then the chances are that your parents have already schooled you well in the power of compounding. They've most likely set you up a nice little trust fund, one which has been compounding throughout your childhood. If, however, your childhood was like the majority of others, then you're probably on your own with this one. Stick your money under your mattress, and your money won't grow at all. But put your money in a standard savings account, and you're still unlikely to receive the returns that your hard-earned income deserves. This is because of inflation, whereby you will actually be losing money. Yes, even in a savings account. This is due to the current low rates of interest offered by high street banks. Robert G. Allen said, "How many millionaires do you know who have become wealthy by investing in savings accounts?" I rest my case. The good news, however, is that finding a return of above 6% is relatively easy, if you look to invest in either the stock market or in real estate. For example, £550 invested monthly, over the course of 40 years, with an annual interest rate of 6%, will be worth £1,054,329.91. This is amazing, considering that you only paid in £264,000. And that's the power of interest earning interest, over the course of time. If, like me, you're starting a little later in life, then let's look at another example. By cutting the time invested in half, to only 20 years, your investment will be worth only £250,605.17. That's still good considering you've only paid in £132,000. I've chosen these two examples to explain the importance of time, in relation to compound interest. Investing over the course of 20 years, and your invested funds almost double. However, if you're investing over the 40-year period, then your invested fund more than quadruples. That's compound interest right there. Like and subscribe to the channel and check out the links in the description for more content.